In Money Matters, the JSE All Share Index is still under pressure today after closing marginally lower on Thursday. The third straight session of losses. Market sentiment remains pressured by expectations of even higher interest rates by the U.S. Fed ahead of a crucial U.S. jobs report. On Friday, independent market analyst Karl Gevers joins us now for the latest market news. Thank you very much, Karl, for your time. To start with an overview of how the local index and the rand are faring so far at midday.
Yeah, good afternoon. The JSE, as you mentioned, tracking global markets weaker. Again, interest rate direction being the main driver of that. We've seen the JSE, almost 2% down at one stage, currently about 1.65% down across all the indices, all the sectors. And globally, we see markets also across the board in the red between 1% and 3%. So certainly a red day today. If one looks at the rand, it has actually strengthened slightly, currently at 18.42 to the dollar. Again, a very, very tough week for the rand, having reached, the 1860 levels to the dollar, after the weak GDP numbers and also the S&P outlook that was downgraded. So a lot of pressure on the rand today, easing slightly, and there's the jobless or non-farm payroll numbers that the market will be watching, and certainly that will impact the currencies and also the market sentiment.
Well, let's take a look at the country's current account balance, shifting to a deficit of 174 billion rand in the fourth quarter of 2022. Why?
Yeah, so the main reasons for that were, in summary, were increased imports and more expensive imports, because we've seen the weakening currency, and also less exports, and also in terms of volume and also in terms of the rand value, given the slightly weaker commodity prices. And the volumes were obviously affected by the logistics infrastructure problems that we've had, and that would be Transnet, where we had a force majeure and holding up proceedings there. So that certainly played a big role, especially in the last quarter of 2022. And then, of course, as I mentioned, the weaker rand did increase the cost of imports. So overall, the whole increased current account deficit will increase the funding needs of the country. So I think certainly not a good thing, and expected to continue in that vein in 2023.
And Premier Foods plans to list on the JSE's main board this month. Are companies still opting to list?
Yeah, if one looks at the Premier situation, Premier is part of Brait's portfolio. Was looking to list that in December last year, but because of the whole Pala circus, the market wasn't conducive to that listing. So now Brait bringing it back to market, also on the back of, as I mentioned earlier in the month, on the back of institutional investor demand. So the main reason for the listing is that Brait's strategy has been to distribute assets to shareholders. This being the first part of that, with 53% of Premier being listed, and then beyond that, Brait will and the listing bringing some liquidity to Brait to sort out those issues for them, and then beyond that, they will be able to then unbundle the remainder to shareholders, and they indicated that would happen by the end of December 2024. So not necessarily a capital raising situation, which is what most companies would come to the market or to the JSE for. A bit of a unique situation here, and also one that is quite attractive, bringing another food producer, especially in the milling and baking environment, to the market.
Mm-hmm. Shareholders of Ericsson are questioning the telecom equipment giant's decision to deviate from its own remuneration guidelines to pay huge bonuses to the CEO. What's going on?
Yeah, so Ericsson purchased a company called Vonage Holdings in 2022, I think it was. And the CEO where the pay is relating to is from that company, getting paid $36 million compared to Ericsson's own CEO earning $5 million. So especially shareholders in Sweden are really up in arms because this deviates from the compensation guidelines, and it needs to be justified and explained. Certainly one of those where one needs shareholder activism to hold the company to account, part of the increased governance, watching that, and also the ESG component, and we'll see how that develops.
Thank you very much. Karl Gevers is an independent market analyst.